Good morning, gang. Good morning, good afternoon, good evening, or good night, depending on where you are in the world when you watch this. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. This is just my view of the markets, and it's for educational purposes only. And now we've got that out of the way. Let's jump into the Bitcoin chart, shall we? First and foremost, guys, remember, I don't get paid to do this for you guys, so if you do appreciate the free content, do me a favour, go down below, hit that like button, and leave some spammy comment. I really don't care what you say. You know, it just helps boost us into the old algorithm. And here we go. So, since last week, nothing much has changed. Last Thursday would have been here. Okay, we're explaining that locally I did have a long trade to hedge against the short. Obviously, you guys know I talked about this in last week's video. We shorted this pivot here after this high was put in around the monthly open. Since then, obviously, we came back down. I was talking about this long trade that we had down here. Very simple swing failure pattern. Changed some market structure within this, and then obviously we got the rise. Now, this rise didn't even go that high, which is showing the weakness overall in the chart. Okay, so this was kind of like your early indication. This was your first heads up that obviously larger entities want the price to go down, because we talked about this. Once again, we had market orders trying to drive price up. Price wasn't budging at all, and obviously in the end it just rolled over. And then this weakness has just continued realistically into this, because this couldn't even get up to a naked point of control that we got set up here and the golden pocket at the time. So if we just show this fib from the absolute high to the low at the time, we couldn't even get up here. Okay, this is just really weak. Okay, so in the end, the rest of this long position that I took got stopped out into profit. Not a problem, I don't really care, and obviously we let the short run. Now, since then, again, the hard trading environment for the average trader continues. Now, what do I mean by that? Well, obviously we had this that we had here. Okay, for someone that's experienced, someone that uses order flow without fail every single day, this was pretty obvious what was going on. Now, this is slightly different, is this environment, because this is what I'd consider a slow bleed environment. What do I mean by that? Well, every rise that we get, it just ends up in another sell-off. Then a rise, and then a sell-off, and then a rise, and then a sell-off. It's just a slow bleed, and this is what normally catches people off site, because you get a lot of situations within this where you do get market structure changes. You know, if I'm looking on the 30-minute chart like this, I'm going to hopefully teach you something here. You get, obviously, the high that causes the low, so therefore, you know, the average trader, and the average good trader as well, is going to say, oh, look, 30-minute structure is broken. Cool, right, what I want to do is I want a longer pullback. Cool, I will longer pullback, and then it just goes straight through your fund zone, and then just continues going down and stops you out. Okay, so this is why you've got to be really careful in a slow bleed environment. This is what I teach the guys in the group, you know, part of the educational material. Slow bleed environment, I am sat on my hands, apart from scalps. There's lots of scalps to be had if you're a low time frame trader. You just sat on your hands, because what you want to see is a real sign of strength. Now, what does that look like? Okay, so a lot of people think something like this. Oh, sign of strength, yeah, it broke structure, yeah, cool, long it, and it just fails. Okay, what you want to see realistically is you want to see a really big buy up. Okay, a really big buy up and a healthy buy up, not just a short squeeze, but you want to see new longs coming into the market, new longs at market. You want to see open interest increasing. You want to see delta increasing. You want to see participation. You want to see spot limit bids following it up and chasing it up. That's what you want to see. You don't want to see a short squeeze like we had here, okay, like we had this morning. You have a short squeeze up, and then right at the top of the move, then you get some aggressive participants coming into the market trying to market long with size, and then it just starts to reverse. Okay, so effectively these are the candle chasers, and obviously, as you guys know, I take the piss out of those guys all the time, because the candle chasers normally is because they're using some sort of paid indicator that gives a buy signal after several of the same color candles in a row. Okay, and it's just idiot. Those type of indicators, they're great for trending markets. Okay, it's not good for a 6-month sideways market, sideways and down. Okay, it's not good for that kind of condition. It's good for your trending. So those kind of indicators, trend-based indicators with your magic dots on and your buy and sell signs, they're great when the market does this, but the market doesn't do this for very long. Most of the time, the market is going sideways, or sideways and slightly down in this instance. Okay, your actual trending moves are short-lived. which is why those magic indicators at the sell tier are a load of shit. Right, anyway, I'm going to start ranting, so let's move on. Right, so what am I looking for next? What am I looking for next? Well, first and foremost, obviously, we've got the range, the 6 month range. Now, I'm going to admit this because I've changed this. On Tuesday, I did the members live stream, and I've now updated my range. Okay, and I'll give you the reasoning behind updating the range as well, because we need to update things as price develops. Okay, so as it stands right now, you guys know that this was my range low, and it was for quite some time, and it served us very well. Okay, little deviation here, backtest here, through deviation, came up, and so on and so on. Okay, and obviously the EQs, lovely, well respected. However, new data has said that I'm going to now move my macro range to here. I'm going to tell you the reasoning behind it. It's because now the cycle point of control, I'm going to call it a cycle. It's technically the macro, but we're going to call it the cycle. When we drag it along all of the data going back to 2020 to where we are right now. Okay, you can see here the point of control here has now moved. Now again, this is on Bybit, so this is not going to be the same across all exchanges. However, you guys know me, I trade on Bybit, so therefore I'm using this data. So you can see here, the macro point of control now has moved up from here, where it used to be before, around 47, 48k. And it's now moved up to here. So therefore that's now saying, all right, okay, so this is now a very important, valid level. Very important level. So therefore, does the macro range work in this instance now, where it is? Well, let's zoom out and have a look. There you go. Well, you got a slight front run of your EQ there, but it's close enough. Cool. Yeah, this still works. This still works. This still works. And we've obviously got lows. We've got highs. Obviously, this is showing weakness because it can't even get its ass back up to here. And then obviously we've got respect down here. So therefore, this is now my new macro range. Now, on top of that, what do we need to do? Well, we need to do a volume profile. Here we go. Right, so let's talk this through. You know, last week I was talking about this potentially being some sort of flat structure. Well, this is still got the potential. Okay, obviously it's gone beyond that 1-to-1, so it's no longer a running flat. Now we're into the point where we've taken out this low, so it's got to be an expanded flat, or it's not a flat at all. Okay, again, nobody knows. It's the magic of trading. So let's talk upside first. So where's the sticky zones, and where do we start to see a little bit of strength? Well, first and foremost, we start to see a little bit of strength if we can first and foremost take out yesterday's highs, but more specifically get our ass back above here and then start flipping these levels. Now at this level here, this is 60.271. Okay, so this is the value area low of all this 6 month consolidation. Value area low 60.271. Now that level is very important because if we come out of here and then open up the point of controls, we can see here that if we go on to this point of control here, if you look at that, that's 60.1k, give or take. Okay, so there or thereabouts, same sort of region. Again, this is trading, it's never perfect. Okay, but we can see here we've got a naked point of control up here. We do have one down here, by the way, 59.3, but we've got this one here at 60.1, 60.2, bit of a region. Now, once again, why is that important? Well, I take the piss at crypto bros all the time. They love the round numbers, so they love the 60k, and for some reason 60k seems to be the biggest number in the world for crypto bros. Don't know if that's the maximum that they can counter, but we'll see. Start to flip that, and then that's going to start looking stronger. Okay, so if we can get above that and turn that 60.2, 60.1k level into support, then we can start looking naturally for some higher prices. Now, first and foremost, we can't argue that we've got a higher time frame golden pocket here at 61k. Okay, can't ignore that. We can't ignore that. That is there. However, flip that and start heading up. Then realistically, you're coming back into this consolidation here. Yes, that's likely going to be a sticky zone, but the chances then increase of going back up into the EQ. Now, at the EQ, do we quite simply run these stops, take the liquidity and turn around? Whether you got a trade set up there for the short side, okay? Once again, into your area of interest, then does it give you a setup? If it does, cool, there's a trade. If it doesn't, there's no trade. Just sit back and wait patiently. Flip that. We've still got this macro point of control. Can't ignore that. 67k. Big zone here. 67k. Can't ignore that. Flip that. Cool. We look for higher. Reject there. Cool. We look for lower. Now, again, it doesn't mean if it comes up to here, this is then going to roll all the way down. That doesn't mean that, because that's going to look quite strong if it comes up here, because that means we've come up, we've come down, and then we've come up on higher highs and higher lows. That's starting to look a little bit healthier. So yeah, it could bring a pullback, but then It also could do this. Okay, we don't know until it happens. Okay, once again, anyone that tells you otherwise is talking out of their backside, and they're likely some sort of child influencer like the rest of the fucking market. Anyway, flip this, value area high. Reject a value area high. Yep, low time frame short. Happy days. Flip value area high, then overall high, most likely. It doesn't have to get there, but the odds increase in favour of getting up towards the overall range high. Now, what happens at range high? Is this where you take massive longs and trade the breakout? Not me personally. I don't trade breakouts. Very low hit rate. You're idiots, they'll tell you to do breakout trading. So therefore, for me, I'd be looking, do we get a rejection here? If we do, cool, I'll be shorting it. If not, I'll let it go higher. Now, I'm going to reiterate something that I've been saying for the past 6 months. There's still a bit of a sticky zone for me around 77k. Can't ignore that. I cannot ignore that. There's still a sticky zone there. If it flips that and goes higher, yeah, fair enough, cool. I'll be looking at my bullish Elliott Wave targets. And I might even do a video on it for you guys if you hit the likes and you let me know in the comments. Reject here, then I'll be looking short acceptance back into the range. Simple. Okay. Now, downside. I talked about this level last week. We still have a bit of a sticky zone down here, down around 54, 55k. So that would be a fib from the absolute low up to the current high. And you can see here, 54, 55k. We've got a bit of a sticky zone down here. Okay. So anywhere, my circle's in the wrong place. There. Somewhere within this region. Okay. Within there. If we get a bullish reaction within here, yes, I will be looking for longs. I'll be very cautious because then we've got the range lows just above us. Do we get acceptance back in? Yeah, we can look for high prices. Do we not get acceptance back in and we just reject down? Yeah, fair enough. That's why you need to understand how to trade. You need to understand when to move your stops into profit, where to take profits, and when to get the hell out of the way. Okay, so we'll start to lose this, and then this looks a little bit more bearish, and we can potentially start looking for lower targets. Now, lower targets, once again, it's the same regions as I've been talking about. I really do sound like a stuck record when I do these streams. I apologise. Do I sound like a stuck record? If we come down lower, again, I'm just putting a volume profile from the absolute lows to where we are right now, so we can see it on here. Okay. If we come down lower and we start to take out this level here, if I can snap that on, there we go. First and foremost, I'm not against a simple swing failure pattern. Not against that. Gotta love a swing failure pattern, a bit of a liquidity grab for a quick reversal, just like what happened yesterday. Took out that low, had a nice bounce to the upside. Okay, not against that. But if it doesn't hold there and it starts to come lower, then you guys know the score. Where am I looking? Well, first and foremost, this consolidation here, roughly around, I can bring it up, yearly open. Okay, you can see here, high volume down here. So this is roughly between 42 and 44, but I'd say it as lower down as this pivot low here, which is 38k. Okay, if we come down as low as 38k and start to get a positive reaction within this zone, ideally take out those stops, that'd be great, cool. So let's get a positive reaction, yeah, great, cool. I've got a long trigger. If I don't get a setup within this zone, then I will just sit back and wait patiently. Price will either go up without me, and that's fine, or it'll go lower. If it goes lower, once again, where's the volume? Well, you've got a cluster here and a cluster there, okay? Personally, I would prefer the lower cluster. Why would you not prefer the lower cluster? When that's going to give you the tighter risk to reward for potential upside, but we can't rule it out. If it comes lower than that, then all we're doing is we're looking back at this old range, okay? You guys all remember this range. This was a very fun range to trade. There you go. Well, that's where all your volume is and your point of control for the whole move up. Nice and simple. Okay, we'll play it level to level. We don't know what's going to happen next. We just wait for price to come into an area where we want to do business. And if it does come into that area, the next question is, does it give you your entry criteria? Yes or no? If it does, take a trade. If it doesn't, there's no trade. Simple. Okay, you must know where you are wrong. You must know where you are going to take profits. You must not be greedy, so you must lock in profits. Okay, right, that'll wrap up today's video. Hopefully that was short and sweet, 15 minutes, that'll do. Until next time, gang, as you were. Bye-bye.